Hey everyone, this is Jordan with Foodbevy, and welcome to today's workshop on utilizing R&D tax credits for your business. I'm super excited to welcome our guests today, Maggie with Leighton and Roy with Natural Stacks, to talk about how we can help get you money back as a founder. With Foodbevy, I'm always focused on ways that either help you make money or help you save money and get money back. And this is a really good opportunity that I think you'll be excited for, that can make a huge impact on your business. So just a couple of ground rules. If you have any questions for our panelists, feel free to drop those in the chat and we'll get those answered kind of throughout the conversation. And then if you have any deeper questions, we'll have time for Q&A at the end, the last 15 minutes or so. So with that, I would like to introduce Maggie with Leighton, and you can give just a quick intro of yourself, and then we'll have Roy do a quick intro.
Hey, everybody. Thanks so much for having us. Jordan, thank you so much for setting this up. And Roy, thank you for coming. I am very excited to be talking to you guys today. I work for a firm called Leighton, and we specialize in finding tax credits for businesses. And I know tax can be a boring and undesirable topic, but today we're talking about tax credits, which means money, so less tax you're paying. So it should be interesting and definitely worth listening to. Most people think they may not qualify, but have a listen. You likely will. And then hopefully we can identify credits for you in the future. And then if you guys can't stay for the entire time, we'll drop a link in here where you can book a meeting to learn more. We know how busy people are. So if you can, of course, we would love for you to listen, but if you can't, you can also book a meeting. And Olivia has just dropped a link within the chat. So thanks.
Excellent. And Roy, if you want to give a quick intro.
Yeah, cheers. Roy Krebs, founder and CEO of Natural Stacks. We sell open source supplements to build a better brain. Truly an omni-channel brand, sold in retail, online, and Amazon. Develop all of our own custom formulas, and our tax credits with Leighton have been huge. And I love helping entrepreneurs. I love CPG space. Jordan's got an awesome group, so yeah, I'm happy to help and share my experience with getting these tax credits. I think you'll be surprised how easy it was and how much we got back. I am not a fan of tax, so I'm very happy to not pay as much tax.
Awesome. So Maggie, I'd love for you to just get started and introduce what the tax credit is and what our agenda is going to be today.
Awesome. So we're going to start by setting the stage so you guys understand exactly what the R&D tax credit is and what we're seeing in the industry and what this helps to offset. And then we'll go through just a bit more detail on the credit, and then we'll hand it over to Roy to actually talk about his experience. That's probably going to be the most interesting part of the webinar, but we do want you to understand what this tax credit is before we give you an example. And then we will talk through two other credits that are available to this industry, and then we'll hear from you guys with a live Q&A. So within this industry, within the food and beverage industry, and it's not necessarily limited to just food and beverage, this does branch out into cannabis. So really think of it from a broad spectrum. The innovation trends that we're seeing, and again, it's not limited to just these, but we are seeing across most industries an increasing effort to make things sustainable. As we all know, we have an environment to take care of, and taking this measure now will hopefully help us for the future. So it's a huge initiative for most companies, but of course it can also be costly. And then organic certifications, products, and growth methods. I think the need for organic and the desire for organic food has risen over the past 10 years, and I think it's only trending within that direction moving forward. And then retrofitting equipment to serve another purpose. This is extremely useful. We saw a lot of folks pivot to the manufacturing of hand sanitizer when the pandemic hit. So, and it was extremely valuable and useful when we were in this crisis mode. And then CBD, obviously CBD is very popular. And I think COVID also heightened the popularity of CBD and cannabis. I had someone recently say to us that cannabis is the new toilet paper. So it's definitely popular. So we're seeing an uptick in that as well. So with innovation, there definitely comes some challenges alongside that. You're as a business owner, you're hoping to satisfy consumer flavor expectations and make sure that they are enjoying this product and want to purchase it, which means you're going to have to test. And then the environmental factors that align with the sustainability efforts that are top of mind for everyone. It can be extremely costly to figure out how to take advantage of the pros and the cons when it comes to the environment and what it's presenting you with. And then, every business wants to be as efficient as possible. So efficiency is always top of mind for business owners, and then labor costs and maintenance. The biggest part of the tax credit calculations typically is always your wages. People are expensive. And there's not too much we can do about it except offset it with tax credits. And then of course the supply chain, it takes a number of folks to actually make this work. So navigating through that supply chain and ensuring that you can complete your mission and complete your product is a lot easier with a little bit more money to actually dump in this. So with that said, the R&D tax credit and tax credits in general typically help to alleviate some of these issues, or at least provide a solution to some of these challenges within the industry. The research and development tax credit has been around since the 80s. And when it was introduced in the 1980s, it was really more intended for a large business like Apple or Google, who were creating something new for an entire industry. And it wasn't until 2015 when the parameters of the R&D tax credit changed, and they then allowed all businesses to qualify. So the work that qualifies for the R&D tax credit does not have to be new to your business. It just has to be, it doesn't have to be new to the industry. It just has to be new to your business. So there's a common misconception that the R&D tax credit is just for people in white lab coats with beakers doing experiments and in a more clinical setting. And it doesn't have to be in a clinical setting. One of the most common things that I hear from our clients is that they're like, well, we're already doing this because it's part of our job. This is how we keep our business running. And that's exactly what it rewards. The changes that were made in 2015 came out of an economic stimulus act. And so what the government is really hoping for with this tax credit is to incentivize businesses to make themselves better by trying new things, incorporating new technology, improving upon their existing techniques and processes. And in turn, that typically results in making purchases and hiring people, which all drive tax-paying activities. So what the credit actually does is it offsets your income tax liability. And this is a big deal because it's a dollar for dollar tax credit. It's not a reduction. So this is actual cash on a dollar for dollar basis, which is huge. It allows you to free up cash to reinvest in your business, hire those people, buy that equipment. And there are often businesses that are not in a position where they're paying income tax. That's okay. You don't have to be profitable or paying income tax. You can also use this to reduce your payroll tax liability. If you are 5 years of age in business and under, you'll qualify for that. And what that'll do is on a quarterly basis, it'll offset your payroll tax liability. So same process, same calculation, it just offsets a different thing. So when we approach a study and we qualify the work that is allowed to be included within the study, we have to follow the guidelines set forth by the IRS. And they have a little something called, it's a very creative name. It's called the 4-part test. I don't know how they came up with that. I'm thinking it might be the 4 components that lie within it. The first one being a new or improved product, process, technique, formula, software, and beyond. So the ETC there really lets you know how broad this can be. So I think if you have any inkling that what you're doing is new, then you're likely going to qualify. That being said, it does also have to be either technological in nature or there has to be an application of the hard science. So anything that is either scientific or engineer or there's mathematical equations applied to it, it's likely that this will be a good fit. And then of course there has to be an alternative that's evaluated. And then finally you have to come out with a solution, or you have to eliminate some sort of uncertainty. There are many projects that you'll go through, try something, and your outcome is this didn't work. That still qualifies. We still want to know about it, and we still will be able to get you money back for unsuccessful projects. So let's hand it over to Roy to hear a little bit about his process and what he thought initially going into this with Leighton. And I know that he was pretty surprised to learn that the stuff he was doing qualified. So we'd love to hear all about it, Roy.
Yeah, thank you. And it's, I heard about R&D tax credits years ago, and I asked my CPA, and they're like, "Oh no, you guys aren't going to qualify. You have mostly contractors, you don't have many employees, or whatever it was." I asked several tax professionals, and they just didn't know about it, or they didn't think we would be able to qualify. So I kind of wrote it off. And then like 2 years later, I actually don't remember where I first heard about Leighton, but we got a new CPA, and he was like, "Oh, well, same thing." It's like, I don't really know anything about tax credits, but there are R&D tax credit specialists who you should talk to and see if this is something that works. And that's when I first talked with Leighton, and they were right away like, "Oh yeah, for sure. I think you guys have a lot of qualifying activities that you're going to save some big money." And it was awesome to hear that, because I had completely written off. I was told by tax professionals that we weren't going to qualify. And that's kind of what I've noticed, is just most CPAs or people that are handling your books don't know about it, or you really have no experience with R&D tax credits. So you have to go to a specialist like Leighton, and they'll send everything over to your CPA, and then they submit your tax returns, and you're good to go. So the process with working with Leighton is, first you set up a kind of introductory phone call, and they ask you a bunch of questions just to figure out what aspects of your business are going to qualify. And then you set up a second call, I think, with more of their tax specialists, and really just kind of run through each project. And then they have you send them your previous tax returns and W-2s, 1099s. Again, this so far has only taken me an hour or two of my time. And then you fill out a list of projects, which is any R&D, any new production, any uncertainty. This could be new packaging, it could be a new formula. And I think in the food and beverage space, as long as you're not selling a private label product, you're going to qualify, because you're trying to make something taste good. And that's hard. There's always uncertainty in that. You're always going to go through several iterations of a formula until you're like, okay, that's the right taste. You're trying to mix novel ingredients together, and there's always going to be uncertainty there. Is this going to be stable? Is it going to have the shelf life? Is it going to look nice? You have all kinds of uncertainty with food and beverage products. Same with supplements. We're creating custom formulas. We're trying to mix ingredients together that we've never mixed together. We're not sure if they're gonna mix, or if they're gonna solidify, if they're gonna taste good, if we're gonna have the right results for the customer, if it's gonna have efficacy. So all of these things are qualifying activities. You're developing new packaging. Maybe you're switching from a wrapper to a pouch, or a jar to a can or something. There's uncertainty there. Is it going to hold the same shelf life? Is it going to maintain the carbonation if you have some sort of drink? So really kind of open your mind up to yeah, if you're developing a new product, or you're changing a formula, if you're improving the flavor profile, if you're improving the texture, the taste, the look, the shelf life, all these things are R&D. And so you fill out this list of projects, and you just have a couple notes on each project of what was the background behind this, what was the technical challenges that you had putting this together, what were the uncertainties, and then how did you overcome those uncertainties? So for us, it's lab testing. It's giving a small test group to customers, getting their feedback, doing bench samples in the lab, and all these things qualify. So as Maggie mentioned, employee or staff cost is generally the biggest thing. And what you do is you simply fill out this form with everyone who touched any of these projects. So, and about 1% of their time spent on each one of these projects. So for us at Natural Stacks, we have a product developer. This guy, 100% of his time is spent developing products and doing R&D. Me as the CEO, something like 10 or 20% of my time, because I'm managing that project, I'm overseeing it, I'm providing direction. I'm saying, oh no, that doesn't look right, doesn't taste right, please try again. So I've definitely spent a good portion of my time doing that. Even our marketing team, they spend 1% of their time in R&D, because they're doing market research. They're providing input saying, oh, this is not going to sell, or this is what you guys need to do. This is the price point you need to hit. You're a designer, you're a graphic designer. They're working on the packaging. They're involved in this R&D projects. So really, it's a lot more than you think. A lot more team members than you think they touch these projects. The product is the backbone of your whole business, and everyone has a piece in it. So it really does add up pretty quickly. Like I said, as long as you're not just private labeling something, you are doing R&D, and a lot of people on your team are touching it. Also, if you're going into a production run, which we've done multiple times, we try to keep our first order, as low as possible, negotiate with the manufacturer to get a super low MOQ. And there's still uncertainty for us when we're going into that first order. We think it's going to work, but it might not. And this has happened with several of our products, where we'll do a production run, and then we'll get feedback from customers like, oh, it didn't taste right, or this didn't solidify, or this this didn't look right. And we'll go back and make changes, and then do a second production run with those changes. And you can actually, some of that first production run, and maybe even the second production run, if there's still uncertainty, will qualify for these R&D tax credits. So it really does add up. It's once you provide Leighton with the information, and especially the first time you do it, it's just a little bit of, you get a little guidance on, okay, what kind of information am I looking for? And for us, maybe after a week, we're able to get back all the docs they need. And then it's really in their hands, and they come back and say, here's what you qualify for. Here's the docs, give this to your CPA, and they'll submit it with your tax returns. What blew me away the first time I did this is that Leighton's able to look back 3 years. So if you've been around for more than a few years, not only can you get, whatever is happening here in 2021, but 2020, 2019, 2018, you can go back several years and get some fat checks back from the government that you can infuse back into your business. And now that we've done this a couple times with Leighton, it's super easy. I just have our product development team, our supply chain team, fill out these worksheets as they're developing the product. So we don't have to go back at the end of the year and be like, oh, what happened here? How did we do this? We just keep notes as we're doing it and fill out the sheet. And then at the end of the year, there you go. Every year we're doing R&D activities. We're either changing formulas, we're developing new products, we're changing the packaging. So we have a lot of R&D activities every year. So let me get to the fun part. We got over $110,000. I just looked last night. I calculated my numbers. First time we did this, we got $75K back, $75,000 over 3 years. And then last year, 2020, we got $36,000 back from the government. So in previous years, you will straight up get a check from the government, and it takes a few months. So, everything's slow in the government, but you will get a check. And then if you're submitting the R&D tax credit with your tax returns, you will save on what that tax liability is. So
Right, can I just say that, like, I remember, like, you first reached out about this or introduced me to Leighton, and I was like, oh my God, like, holy shit, that's a ton of money to get back, to put back into your business. It's not just like, $1,000 here, 2,000, which would still be great. But especially for, there's like a little bit of upfront work, but Leighton takes like the bulk of that work and does it for you. And it's significant savings. I was just even thinking, like, we, with T-Squares, had a couple like test runs at manufacturers, and there's some you spent like $10,000 on just for ingredients, time, labor, and all that stuff. And you can essentially get that back as R&D tax credits, which is amazing.
Absolutely, I was blown away as well. I tell everyone about it. Most people aren't even taking advantage of this, and you know what? Natural Stacks is not a big company. Our team is 10, 12 people. Several years ago it was less, and we're still getting tens of thousands of dollars back. Because, like I said, a lot of your staff's team time is working on these new product development projects, and you spend a ton of money on bench samples, first production runs when there's uncertainty, lab testing, all these things. It really does add up, and I was surprised, and obviously this is something that's just automatic for us going forward, is every year, and now it's $30,000-$40,000 that we're getting back each year. It's huge.
That's awesome, Roy. That's exactly what we love to hear. And I think that is a lot of what people don't realize, the impact and the amount that you really can get back just by running your business and doing things that you'd probably be doing anyways. So thank you. Thank you for sharing.
I see a couple questions. I can try to hit them real quick. Does a business have to apply this credit in the year the R&D expense is incurred? Can it be carried forward or backwards?
Sure can. You can carry it. You can do a look back of 3 years, like Roy said. And then if you don't have the income tax liability to offset, you can carry it forward for 20 years.
Wow. Yeah, it's huge. Natural Stacks, we were not profitable 2019. And so, we were able to carry a lot of that forward for the next year, which is awesome. Another question, do you pay Leighton out of the refund of taxes, or do you have to pay them up front? Maggie can mention, but it's a percent of what they get back, which I love that model. You're not just like, you're not just saying, hey, we'll give you guys this much money, go see what you can do. It's like, you're giving them a percent of what you're getting back. And then Leighton also has pretty long payment terms. So it's about when you get the check back from the government is when you pay Leighton. So it's cash flow wise is super easy to work with. I don't know if you want to provide a little more detail there.
Yeah, I mean, you pretty much nailed it right on the head. We design it so that when you guys are getting your check back from the IRS, if you're doing a 3-year look back, it should align with when our payment is due. We would love to just, say, pay us when you get it. But We do that to encourage people to begin their amendment process as soon as we deliver our work, so that you can get that process going with the government. It's out of our hands. We can't force the IRS to write that check, so we are relying on the government to issue that. But we do we've designed it so that it's realistic for our clients.
Awesome. I think those are all the questions we have for now. If anyone else has any other questions, feel free to drop those in the chat.
Okay, thank you guys. I thought it would be good to include some other examples of qualifying R&D activities in case there wasn't anything that we've talked about today that resonated with you. So I'll run through these. The improving taste or nutritional content of food and beverage product formulations, reformulating a recipe to include additional ingredients. I think Roy was mentioning he does that. We see that a lot in like breweries. They're of course always reformulating the recipe year over year. Improving machinery and equipment to ensure safe handling of food, improve productivity and cost efficiency. This also applies to retrofitting, as we were mentioning before. Creating new packaging to improve shelf life, durability, and product integrity. Developing innovative and environmentally friendly packaging. Incorporating newer improved equipment into production lines. And environmental recipe development, including seasonal foods and drinks. So right now we're seeing a lot of pumpkin beers. That was my attempt at a joke, you guys. So I just wanted to run through
pumpkin these days.
I know. As soon as it drops below, actually not even temperature wise, but as soon as it's September 1st, everything's pumpkin. So I wanted to run through the credits that we support. The R&D tax credit is our core competency, and you'll see that product throughout our offices globally. And then we have some credits that are specific to the United States. The first one being the reverse sales and use tax audit. Then the second one is the employee retention credit, which we call ERC, which I'm sure many of you have either taken advantage of or are familiar with. So I'll spare you this a detailed approach to the R&D tax credit, but just to understand, if you are paying income tax liability, this will offset that. And if you are not paying income tax liability, but you have a payroll, this will offset your payroll tax liability. So if you've got a tax liability, we can offset it. Now the reverse sales and use tax audit is pretty niche. This is intended to help businesses who are purchasing a lot of supplies. We find that within this industry, it is a supply heavy industry. So this tends to be a really good fit. And the reason why this has recently come into existence is because there was a legislation that came out of a legal settlement with Wayfair. And what it required was that you pay, if you're an out-of-state vendor selling something into a different state, you have to pay the sales tax for that given state and charge that sales tax to folks. So what ends up happening is there's loads of overpayment because each state has a different tax rate, and also they have a different tax rate for the supply that you're purchasing. So there tends to be loads of overpayment. There are softwares out there that help to actually track this, but they don't always do the best job. So there is always room for error and for correction. It's really easy for us to take a look and understand if you guys would be a good fit for this. We just need to look at your chart of accounts, and then we can determine whether you are a good fit. If you're initially a good fit if you are making purchases from out-of-state vendors, if you're filing sales and use tax returns, and if you have not reviewed the accuracy of your sales tax process in the last 4 years, which I think most people aren't, that's not really top of mind. So most people are not reviewing that. So we would definitely urge you to take a look at this. We have seen credits back anywhere from $10,000 to $1 million. It just depends on the size of your business and the supplies that you're purchasing. And the last credit that we wanted to touch on is the employee retention credit. This came as a result of COVID, and it's intended to help businesses get back on their feet if they were impacted by COVID. So if your income was reduced by 20% or more in 2021 versus 2019, so we measure this on a quarterly basis, that would put you into eligibility. And then if you had to close your business, either partially or completely due to COVID, that'll also put you into qualification. So it's either or. You don't have to have both of those metrics. It's either your income is reduced or you were closed, or it can be both, but it doesn't have to. And then I would definitely urge people who maybe looked at this initially in 2019 to take a second look, because there are changes on a weekly basis to the legislation around the employee retention credit, because it's new. I mean, as we all know, COVID is impacting us in different ways on a weekly basis. So therefore, the legislation is changing. You have the ability to look back. There is a look back period. So if you took a look before and you weren't a good fit, it's probably worth having a short conversation to understand. You can, now that a quarter has passed, actually, you can now receive up to $33,000 per employee. There are a bunch of stipulations around how we calculate that number, but we'll be able to give you guys an estimate and hopefully get some cash back for you. The other nice part about doing this with one firm is that you can't double dip on the employee retention credit and the R&D credit. So if you're going to pursue both of them, it makes sense to do it with the same person so that we know which salaries you're including in the R&D study or the employee retention. And then we can help guide you on which salaries you should include and which ones are going to yield the most tax credit for you overall. Just a short little blurb about Leighton. We are, our core competency, of course, is innovation funding and tax credits. We have been in business since '97. We opened our first office in France. And then as the research and development tax credit became a permanent part of tax codes, we went from country to country and opened up offices. So we now have 34 offices across 12 countries. We have 20 years of experience, over 2,000 employees at this point. And what I think is most important to mention is that this tax credit, like Roy said, is real. He got back over $100,000. And in the past year, even in the midst of COVID, we were able to identify $1.5 billion in cash for our clients, or in savings rather. So this is a huge benefit. And whether your company is small or large, there's benefit available to you. So I would highly recommend that you at least learn about it. And the nice thing about the way that we approach our studies, it's not just with a tax professional. We have a number of technical consultants we will be working with who have expertise in the field that you support. So we have a number of PhDs that have experience within food science, engineers, chemists, scientists, who will understand the work you're doing, and you won't have to change your language to interpret it for someone that just has expertise in tax. And I thank you guys so much for listening. We'd like to open it up now for Q&A. I believe you can turn your mics on.
Yep. So if anyone has any questions or even wants to bring us a specific kind of questions on like if this would qualify or if that, anything's kind of open right now. The one thing I will say is I recommend, even if you're like, oh, does this apply to me? Like schedule a one-on-one call with the Leighton team, and they'll be able to specifically share like what qualifies, what doesn't, and see it, how approximately how much you might be able to get back from that. And so it's worth everyone doing that. But anyone have any questions right now? Hey, Martin. Yep, you want to jump in?
Yeah, so if we've developed a product, we've gone through the whole cycle, put new packaging together, launched the product and find it's a disaster and we just can't get listings and whatever, and we have to, and the company decide that that line's just not going to fly and we have to move on to another product within the company. Is that all that work and all that work can we get, is that part of that cycle?
Yes, it sure is. So failed, whether it's successful or not, you can include it.
Okay, and then the other question is, because we operate and do from the United States a lot of research development for our overseas businesses. So we're selling to Canada, Australia, South Africa, and we develop a lot of the products here. To what extent is that R&D that we're doing here appropriate for international business? What is it any R&D, or is it only appropriate to R&D that, you know, I'm just trying to understand so giving a good example, I would go into the market here, find a brand new product that I'd like to go to market with. That's assuming that in that particular market that I'm going to go into, I see an opportunity in the United States. This particular product would be good for somewhere else. Let's take it, say, keto product. So I go along and I see there's an opportunity. I go to the company locally in the United States. I start working on their product, do some R&D development here and say, oh, this is a perfect product that I can now develop for my overseas markets. To what extent can one claim R&D on that for products that you're going to be exporting or taking to other countries?
It'll depend upon how you structure your agreement with the company in the US that you're now doing work for. So if you're retaining the IP for that and you own that intellectual property, once you've completed that, then you can claim the R&D. If they're owning it and you're essentially licensing it, or you've paid a one-time fee for that, then it's their R&D.
Yeah, so typically they would have what we call the key ingredient, which it's assuming it's a flour. And then they wouldn't want to sell us just the flour. They've asked us to develop our own formulations because they want a unique formulation for the bread or whatever the product. So yes, they've got the IP on the only ingredient, but we actually own the formula that gets used in the development of that particular product that we're using.
Okay. Yeah. So it sounds like in that instance, the process is owned by you guys, and then you're just purchasing a supply from them essentially. So you'd be able to include that cost as a supply cost. Although just to be clear, in the US, what I presented on today is a US based tax credit. So
Yes,
the employees
correct.
have to be in the US, and then the work has to be completed in the United States as well.
Right.
But if you are doing business in other countries, there's the R&D credit in other countries as well that we can advise on, because we have offices.
Well, do you have any offices in South Africa?
We don't in South Africa.
Because I could make a lot of money there. I've done over 1,000 products I've developed in that market for. So
Oh, wow.
yeah, so there's a lot of, so that's why I'm saying there could be a good opportunity. But I think that definitely would be advised. Just the one question, because you mentioned that the two have to go hand in hand. We fortunately have not submitted anything. We're just about to do that with our payroll company to get us the credit back for the upcoming, for this going back from 2019 to 20 and 2021. So the question is, you saying that we should hold back on that because it's all part of the same cycle? And if you do it with the one, you can't do the R&D and that together?
So with ERC, you can't double dip. Is that what you're saying? You're filing ERC?
No, I'm just saying, it's assuming I just did went to my payroll company and I've asked them to, with a 941, to go ahead and resubmit. The question is that, I know you can't double dip, but you're saying that you need to do that for us, or we can do that but we can't double dip.
So you guys can certainly do that with your payroll provider, but we'll need to see what you've claimed. Then we can't include a portion of those salaries in the R&D credit.
Okay.
So we'll just need to know, and then we can figure it
Okay.
out from there.
Perfect. Thanks, Martin. Great questions. We also have a question from Mark. Mark, you want to jump up?
Hi, everyone. Hi, Maggie. Thank you. And Roy, Jordan, thank you. Just a question. Is the cost of gathering customer insights like a qualified expense? Does it specifically matter if you're only gathering, surveying people for the purpose of improving product, or could it be for anything? And as a byproduct, right, you get some information that helps you tweak your formula or whatever.
Yeah, we can definitely include a portion of that cost. We, of course, need to know a little bit more detail when we got into it, but anything that's supporting your ability to improve your products, continue your development or develop new products, we can include an appropriate portion of that cost.
The
So
portion
could-
being like proportionate to how much of the survey or whatever was intended to change a formula or?
Yeah,
Or-
the impact that it had on it. So we've got proprietary calculations that will apply to each study. And then that's how we would figure out what portion of, like, let's say you spend 100, I'll use simple numbers, but let's say you spend $100 on surveying your market to understand where, like, what people like, dislike, or maybe you had people go out and do it. So we'll figure out how much of that cost we can allocate to the study and to that specific project.
Yep, thank you.
Perfect. Thanks, Mark. Any other questions?
I'll just say, feel free to reach out to me if you want to after this as well. Just roy@naturalstacks.com. Happy to help. And just if you have any questions that you don't want to shout out now, feel free to send, and or Maggie as well, I'm sure.
Would you mind putting that in the chat with the details, please?
Yeah, I love talking to CPG entrepreneurs. So anything really, give me an email.
Awesome. Definitely appreciate that, Roy. Thanks so much, everyone, for joining in, attending today. So like I said, like definitely use the link, set up a call with Leighton, because this will save you serious money, get it back. And then not only can you get it for the past 3 years, but you just use this every year going forward. So it's constantly saving the money. So there's no brainer for you. Let me know if you have any other questions coming out as well. And happy to connect you with the Leighton team, or if you have any follow-up questions, feel free to reach out to me or anyone on the Leighton team as well, or Roy. So thanks so much, everyone. Have a great rest of your Wednesday, and we'll talk to you soon.
Thanks, everybody. Nice
Cheers,
to meet
Jordan.
you. Thanks
Thank you
for
very
having
much.
us.
Right.